Hey everybody, this is Ryan Mallory with SharePlanner.com, the internet's best swing trading website, and I'm here to do another FANG market update here. So we're going to go over the FANG stocks first, and I'll go over some of the major indices, and then from there maybe highlight a couple of sectors that have caught my eye and I think is worth highlighting for you guys. So let's just go ahead and start off with Facebook here. All right, so Facebook is seeing itself back in the news again for the past couple of days. It's got some issues where it sold some of the user data possibly to some Chinese company, and so it is pulling back some, and you're seeing that some today with the stock price and as well as yesterday, though yesterday was just down a smidge. Today it is seeing a little bit more profit taking, down about 1.5%. It was almost down 2% just a few moments ago, so it's seeing a little bit of a bounce. You have some support here, and this kind of is like a inverse head and shoulders pattern here. If you really look at it, you have the left shoulder here, then you have the head, and then you have the right shoulder. And so what you have is you have a confirmed inverse head and shoulder breakout, and now you got the pullback to the neckline, which here it should bounce. I mean, this is a pretty good trade setup here. Ideally, the closer you can get to about that 189 level, I think that'll be better. You've got to be careful with that, Facebook, because there's a lot of headline risk on it, as we've seen back in March, and when the Cambridge Analytica scandal came out, that definitely took its toll on it from an overnight standpoint. So you do have that risk, but you also have a very good quality stock here that's not likely to stay down for very long. So yeah, I think Facebook could be justified as a buy right here. It's a pretty solid risk reward trade setup. Now let's go ahead and look at Amazon. And the last time I did one of these updates, I was kind of skeptical that Amazon would make much of a run going forward. I was thinking to myself, it's $1,600 a share, and it's at around $790 billion, and now it's right there at 800. So I was a little bit skeptical. I didn't think there was a lot of room to run, but as you've seen, it went on a 9-day rally, and it doesn't matter how big or how small you are. 9 straight days of generating profits in a stock is very difficult to do, but it did it. And still, I'm a little bit skeptical of getting long here. I think it would be kind of a crazy play. Why would you? The better play here would be to wait for a pullback to this existing trend line that it's established off of the April lows, and you do that, then you have a pretty good risk reward scenario. But at this point, I don't see any reason to get long on Amazon. Now let's look at Apple. And Apple and Amazon, I kind of put in the same boat, because these are massive companies, the likes of which we've never seen before, and they're just not going to grow by leaps and bounds. For instance, Apple, you're not going to look at a stock worth 50% more this time next year, so or even like 30 or 40%. It's going to be very slow rolling. So while it's a good quality company, it's a very strong value play at this point rather than a growth play. And as swing traders, you really want the stocks that have the potential to make good solid moves. So with Apple and even with Amazon, I mentioned on Amazon to pull back here, and maybe, okay, you can get 2 or 3% back higher, or maybe even 5%, but that's really like the ceiling on it. There's not like the opportunity to make 10 or 15% over a couple of weeks. I just don't see that happening anymore. So the risk reward is not that favorable. So while you might be able to get a good risk profile in the trade, the reward's not going to be that, rewarding. So with Apple, the same case can be made, that there's just not a lot of upside that can be had in this stock. While I think that the stop loss is pretty solid, you can just keep putting it below the rising trend line. I don't see where there's a lot of reward to it. So the way I'm playing Apple these days, and I've played it a few times this year, and for the most part I've been pretty profitable with it. What I do is I wait for it to have a significant sell-off, and then I buy the dip. Now I don't buy the dip blindly. I try to find, you can see I've drawn a whole bunch of lines over the past few months on Apple, trying to find that right dip opportunity. But I played this one here off of the February lows. I mean, I think I got in like 151, 152 and wrote it up for over 10% in profits. And so that's how you really want to play Apple here. You're not looking to buy at the highs here, because there's not a lot of ceiling or room to run from that point. This company is worth $935 billion. How much higher are you really expecting it to go? And even more importantly, how fast are you expecting it to climb? Because you get this stock makes a 2% move, it's pretty much adding $20 billion to its market cap. There's just not a ton of upside. While it may continue to grow over the years, it's not going to be doing it at a very quick pace. So what you got to do is wait for there to be a market correction. I played it right here off of the April lows. That's what you want to do. You want to wait for the bounce. You want to wait for it to push back higher again. So technically, there's some really attractive things about the stock. This bull flag breakout looks really solid. The rising trend line. There's just not the best risk reward anymore to it. That's okay. There's tons of stocks out there. Netflix. This one actually does have a lot of room to run. You have a $150 billion company, still beloved by a lot of traders. I've probably traded this stock more than any stock so far this year. I mean, I've traded it a lot. I think 1 month I traded it like 4 times or so. But overall, it's been pretty good. There have been a couple of trades that didn't quite go as well as I would have liked for them to go. But overall, I'm trading in the positive on the stock, well into the positive. And very happy about how it's performed for me so far this year. And what's nice about this chart too is it's taken some very similar patterns consistently and predictably, where you have like a period of consolidation to where it tries to dip lower and then it just shoots right back up, consolidates after it breaks through the resistance, and then does the same thing again. And it's done that 3 times now. So here I would kind of expect it to have some kind of a pullback maybe to this existing trend line. But if it pulls back to the existing trend line, that'd probably be where you want to buy it. I last sold this at 353. Probably should have held on to it a little bit longer, but I didn't. But I really like this series of higher highs, higher lows. Really not much not to like about it. So if you're in it, stay in it. If you can get in on a pullback to this existing trend line, do that. And finally, you got Googl, which I will never, ever call Alphabet. This has been a stock... I've traded it, but I'm not overly crazy about it. It's looking more bullish right now than it has in months, and that's a good thing for the people holding onto the stock. And the biggest thing is that it broke through this declining resistance level here. So it broke through that, and while it's down about 1% today, it's not losing anything technically. It's still holding up just fine. It's holding on to the 5-day moving average, and more importantly, it's holding on to this support level. So as long as it does that, I'm happy with it. If it starts to creep back below like 1120, there's a good chance we could see it, test the 1060s, and then if that breaks, it would probably hit this trend line again. I'm bullish on it. I think you can even buy it right here off the 5-day trend line. Use this 1% pullback to get a little bit better of a price and see if it can't go challenge its highs again at 1120. Again, this is almost an $800 billion company, so you can't fool yourself into thinking that it's going to be giving you a 15% return over the next 3 weeks. That's not going to happen. But overall, it's a pretty good quality chart. It's kind of lagged the market for the most part of late, but the last 5 days have been phenomenal for it. Okay, so we've gone through the FANG stocks. Let's go ahead and look at the indices and see where we're at with the S&P 500. This is my main chart. This is the stock or the index that I follow the most closely. I'm looking to get my cues about the market from the S&P 500. No other index measures in comparison in its importance to the S&P 500. So we have a rising trend line off of, I believe this is the May lows, May 3rd lows, and it's been holding together pretty good since. Now we had this 3-week consolidation pattern. It literally drove me bonkers because it just never looked like it was going to do anything. And then I believe it was last week, the 29th, where we actually broke down and out of this box pattern to my surprise. And, I got knocked out of some of my long positions. I booked profits in them. And I thought, okay, maybe we're going to be going down to this 200-day moving average again. Or worst case scenario, we retest these lows off of the rising trend line that came from the February lows. But that didn't happen. The next day, we got this bullish kicker. I covered my one short position that I had, added some new long positions, and it's been off to the races since. And you have the breakout on Monday. Then you have where it sustains itself yesterday, and now it's just trying to push higher again today. So really optimistic chart. I think there's a good chance we go and hit these March highs, test those. If we break through that, I think it's on to the S&P 500. Now, the thing about this, though, is it's not a straight line. There's going to be some more challenges to this. I mean, there's headline risk. You've got a president that with a tweet can either cause the market to crash or cause it to soar. So there's a lot to be considerate of. I don't think we're necessarily going straight back up to the all-time highs tomorrow or anytime soon, but I think that there is a lot of strength in this market right now that if it does break these March highs, I think by the end of the year, it wouldn't surprise me if we were testing or beyond the all-time highs that the market established back in January when it had that phenomenal run. All right, let's look at a couple other ones. The DIA, Dow Jones ETF. This one's pretty interesting because you have an inverse head and shoulders pattern, and it's right off of this 200-day moving average. Maybe you could say, well, that's not really an inverse head and shoulders pattern because these two, bottoms here are pretty close with each other. Then fine, call it a double bottom. I don't care. I think the way you look at it, the way you can draw this neckline here shows me to be more of like an inverse head and shoulders pattern. But there is a point there. This left shoulder is pretty much lower than the head, which is not really a common feature and kind of disqualifies it from being an inverse head and shoulders pattern. But the results are going to be the same. Whether you want to consider it a double bottom or whether you want to call it an IH&S pattern, I think once it can clear either this 251 level or even maybe a little bit more aggressively 250.60 level, then I think there's a good chance we're going to see a test of those February highs. And overall, I like this chart. I think it looks pretty good. Along with this bottom being pretty well formed, a double bottom. I can draw you another that'll show how DIA is actually trading in a pretty well-defined channel too. So, I mean, that's pretty solid, pretty bullish. I mean, there's a chance that we could come back and test this, but I think more than likely we're going to see some more upside and possibly break through this resistance pattern there. And then let's look at the QQs. By far the best sector out there, best index. If you're bullish, and you should be, you're crazy not to have tech stocks in your portfolio right now. That's where the money's being made at. That's where you should be heavily positioned at. For me, I have a couple of semiconductor stocks with Texas Instruments and Micron, but then I also have some stocks too that are going to be influenced by the technology sector like Expedia. So I'm liking where the technology sector is going, and even stocks like consumer cyclical, or your discretionary, they're trading at all-time highs right now too. Looks really solid. That's largely helped by the fact that Amazon is doing so well. It's lifting all the retail up. But my trade yesterday in Expedia doing really well, up 2.2% today. But it's going to feel some of that influences from the tech sector as well, just like Netflix does. Netflix trading at its all-time highs. So that's one of the things that I like to do. I like to try to find some of these hybrid stocks. They're not necessarily a tech company, but they do seem to be influenced by the tech sector. And then let's go ahead and look at the Russell. This Russell has been amazing. And a lot of people don't even really talk about it much, but it's been overall a very solid index. The small caps, they've just been on fire. And for most of 2014, late 2013 through almost the beginning of 2016, this thing wasn't going anywhere. I mean, this was the place that you avoided at all costs. It was dead money, but since those lows in early January of 2016, it's just been on fire. And you can see here the chart, it just keeps on pushing higher and higher and higher. Really quality stuff that we're seeing out of the small caps. And I would just go ahead and continue to trade them where the opportunity lies. You have to be careful because there's more volatility with the small caps, and sometimes they can gap down significantly against you if you're long on them, and vice versa if you're short on them. So be careful there. So that's going to do it. That's going to be a wrap. I enjoy going over all these. It's always helpful for me as well to go through them and pour through the charts. I hope you have a great day and happy trading. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splash zone. Thanks and happy trading.